FLGT stock. This is Fulgent Genetics, and Fulgent Genetics just got approved for FDA emergency use authorization for their coronavirus tests, which is huge. And this stock chart is sort of baffling, I think, because this is real news. They just got actual FDA authorization, and this little blast and reversal looks like a fake news reversal where you just get like, oh, whatever, we're going to go to phase 1, but we don't actually have any you know information if this thing actually works or is going to move forward or anything like that. I mean, this kind of stock chart looks like the little fake news thing, but this is real news. Like, they just got approved for large scale usage of their coronavirus tests, and Fulgent Genetics, it's the NGS testing, and this is a genetic sequencing company that can do RNA analysis, and they can actually track the coronavirus, and they can do sequencing to track mutations in the virus, which is really interesting. Let me pop over to an article. So this is not breaking news. This is super old news about the virus. But this is the NGS test. Yeah, so NGS test is the next generation sequencing, like the brand name. But they can sequence the viral genome, and it's a joint venture with China uh, for several years. And then when COVID-19 came out, they got an agreement with the Chinese Academy of Medical Science and the Peking Union Medical College Hospital for diagnostic and mutation analysis, which is really cool. So they can actually track the mutation and the genetics of the actual virus. Yeah, so obviously, I mean, this is more information than just like, does somebody have the virus or not. They're actually going to be able to sequence and take a look at the virus, and they can use this in conjunction with development of drugs and vaccines and things like that to help develop drugs and vaccines. So this is major news, and then obviously they don't need the FDA approval to collect samples and develop the test, but it's a huge thing to get the FDA approval. And there was another article that was saying they're prepared to process maybe like 1,000 tests a day, which is pretty big scale. And and this stock just did a little news blip thing, which is interesting. Yeah, so if you're following this stock, it has actually weirdly tracked the market pretty closely, and the news blasts have not resulted well. I mean, they've reverted down, and this is a really big and good news blast. Um, so I mean, normally on like a fake news blast, I would say, you know, you see if it's kind of, if their stock is trending up or not, and it is. And usually when you get kind of a news blast, you get sort of the hypey thing, and then you kind of settle out on a level a little bit higher than where it came from. And it's doing that, but this is real news. This should be a better chart than that. So, not investment advice, but it sort of has already settled down to the area where it probably should reverse off of the news blast. But um, uh, this seems more bullish than what this chart is representing right now. So this may be an actual real thing to take a bullish look at. For people that are interested in sort of lottery ticket kind of purchases that are related to the coronavirus situation, and we haven't had very much coronavirus in the past week or two. All the news has been martial law and rioting and who knows what's going on, but maybe we'll start getting some more information about the coronavirus situation. um, I did see that the numbers in India are going up. There's some other countries in Brazil, I think, the numbers are going up a lot, and China is even getting some more numbers and talking about opening or closing their borders and things like that. So I think we might be getting some more coronavirus news soon. And let's see what the S&P is doing. Oh, okay, so the pre-market was bullish. I was looking at it a minute ago, and so it's opened kind of a little bit down. All right, so let's flip through. I haven't done the momentum in a minute. Let's flip through the momentum. So on the dailies, we're still up here in bullish zone, and this is not a steep enough move to be bearish on sort of the medium term, 3 or 4 months or something, right? Like this thing needs to make a bearish turn and actually move down. So you need the blue line to diverge and pull the red line really hard all the way down to the bearish side of the chart. So right now, it's still this is still bullish momentum, and it is a little bit of a bearish move, but it's not steep enough to be a big bearish move right now. It's just kind of slight bearish move in bull territory. And let's kind of flip through and see what it looks like right now. Let me go to the weekly actually, because I just saw a video where someone was saying we're getting, moves to the bull side on the weekly, and no, we're not. So the candlesticks don't tell you that we're getting bullish. Like this red line is whether we're bullish or bearish. And on the long term, on the 2 year, we are still bearish, uh, significantly bearish. But it's diverged here where it's pulling up, and this thing needs to get all the way up here to be long-term bullish, like an actual bull market. It's not a bull market yet. This is still bear market territory long-term, and this is pulling up. And so if it does pull it all the way onto the bull side, not just slightly on the bull side, but actually up here, that's a long-term bullish, like bull market and everything. But if this starts kind of converging and chilling out in the bear territory, that gets a little bit dangerous. And if it flips in bear territory, that's super bearish on the long term. But as of right now, we're still bear market long term. But in the kind of month to month, we're still in a bullish run. And let's flip through what's actually going on right now. Okay, so we're making a move up into neutral, kind of neutral territory, like for a couple of week outlook, and we've gone a little bullish. Okay, bullish, like out for the week or something, and trying to make a move down. Okay, so just right now, this move has been big enough to look, a little bit bullish for the week, but it's sort of trending down now, and so in order to become actually bearish, like this thing needs to make a real move, and this thing needs to actually make a real move down to this side of the chart. And so just on the momentum now, it's just like trying to make a bearish move, but hasn't actually done it yet. And this is definitely a breakdown, and it is looking kind of like a rolling top. It looks bearish, but it hasn't actually done anything bearish yet. And so I might want to. I don't know if I kind of want to. I think that we're going to make a move down soon, but I don't know if we're going to make a move down right now. I was thinking, if we get up here, especially if we break above this, like that is a huge spot to go. Like that should chill the VIX out, and that's a massive resistance line for a bear market kind of idea. If you're bearish, like this is a killer spot to short. If we get all the way back up to this line, and this is a 2 year long trend line that's supported from the bottom of the 2018 crash, and we back tested and rejected off this line super hard. And it's quite common to test it twice. And this hasn't really made up its mind what it wants to do yet. Um, yeah, the momentum, yeah, nothing's really indicating. Here on the hourly, it looks like it's trying to move down right now, and we are getting a little bit of a down move. But since we're on this side of the chart, just looking out for like today, tomorrow, and just this week, basically, If this actually moves all the way onto bear territory, well, that'll be like this on the chart, and that will be bearish. But since we're up here on the bullish side of the chart for the next couple of days, if this swings and we get a swing on the bullish side, like that can really easily put in a higher high on the actual chart. Like just a tiny swing, it doesn't even need to swing very much. Like it could just kind of go sideways and wiggle, and that can put in a higher high on the chart. Just as far as the momentum goes, we're still bull side, and this hasn't like it's starting to move down, but it hasn't diverged enough really to pull the red line down. The blue line needs to diverge more than that, and it needs to stay steep, and it needs to actually get down here. So it hasn't really done that, and so this is trying to do a little bearish stuff. But if it does bearish activity and kind of pulls it down, um, but it reverses on the bullish side of the chart, then you can expect it to get here. Like it needs to get down to this side to actually do a bearish move. So it doesn't look very bearish yet. It looks like kind of a neutral, a little bearish move on the bull side. It's just kind of a neutral thing. Yeah, and as we zoom in, that's exactly what it's doing. It's just kind of near neutral, just kind of hanging out. So it's not a very good indicator of what to expect. It's just when it starts moving, kind of what to look out for. And right now, it doesn't look like it's doing much. And this is bearish. Okay, this was one that I really wanted to look at. The dollar looked like it was trying to move, and the dollar has started a bullish move. So a strong dollar move, if that continues, is really bad for the market. That was a really important one. And the yen has started to break down. That's really bad for the market. Okay, so I think we might get an actual bearish move here today, like right now. Metals are still kind of chilling. Small caps, probably a little bigger move than the rest of the market. Small caps have more exposure to the risks in the market right now. And then the XLF is an interesting one because the bond purchasing, the range of stocks that they're looking at bond purchasing is what I think they're doing is instead of buying a big ETF that has a bunch of tech stocks and industrial stuff and financials and all that stuff in there, um, I was looking on Jeff Snyder's Twitter feed and he was showing that in the big crash, it was all the international banks that had no liquidity, and that huge rip had to do everything with liquidity and all the international banks. And that's where all those four-letter word programs came from. And they're pumping the balance sheet went to the moon, and they're getting all the international banks functional so they can service all of the loans across the whole world. Like those international banks provide dollars to the rest of the world, and that's what the huge drawdown was. But right now, it's the USA banks that are having trouble with treasuries and cash flow. And so I think this specific bond purchasing that they're announcing right now is not well. Let me jump over to the actual balance sheet and see. Yeah, let's look at the balance sheet. Did we get a new number? No, it hasn't updated yet. They're supposed to update the balance sheet today, and I'm kind of waiting on it. But without getting today's info, the last couple of days they're like, oh, the Fed's doing all the Fed stuff. They're blowing the balance sheet up. They're going crazy. They're going to start buying bonds and everything like that. I mean, this is the balance sheet over the last crash. Like this is the 2008 crash, and then they tightened and then they blew it up, and it looks like it's going parabolic right now, right? But let's zoom in on the parabolic section. What is it actually doing? It went parabolic back, Feb, March, and then still kind of steep. But look at this, the last week. Let's get in on this. Look at what it's doing. Yeah, negative. It's flat. The last week was dead flat. They're not buying anything. They just came out and they're talking about how they're blowing up the balance sheet and they're gonna go crazy buying bonds and blah blah blah. And wrong. Look at the actual chart. It's flat. They're not buying anything. Fed is not buying stuff right now, and the Treasury is issuing a ton of new treasuries. That's way less liquidity for the market. and it should come out today. I want to see what it looks like. If this thing's flat or down again, that's going to be super, super dangerous for the markets. Really bad liquidity signal. But it still is up. It's like what, 7 trillion 165, 7 trillion 168, almost flat. And when this one comes in today, if it's down, that's really, really bad. Um, but I think I was just looking at the XLFs, and XLFs are not dropping right now. And I think that's because of this bond buying is targeting the US banks. So I don't think they want to buy a whole ETF that has tons of info tech and whatever industrials, and there's some financials in there as well. Like, I think if the USA banks have liquidity issues or repo market issues or something like that, they want to be able to buy the bonds just for individual US banks, so they're not blowing the balance sheet up, but they can still get liquidity to the US banks individually. And that is borderline illegal probably for them to do that. But what have they done over the last like 10 years or 15 years that's not borderline illegal? Like, every bit of this is questionable stuff. They're changing the monetary system. They're linking the Fed and the Treasury in ways that were not supposed to be allowed. I mean, they're bailing out the entire euro dollar system, the entire worldwide dollar issuing system. They're just pumping trillions of dollars across the whole world out to all the international banks. And they're going to continue to support the banks. Like, that's the Fed's number one job. Make sure the banks are operational, make sure the monetary system is functional. Because obviously, if the monetary system screeches to a halt like it did in the big crash, um, it's the entire world monetary system. It's like 70% of all the world's money and all the world's debt is all dollars. And so they're going to do, as they have repeated every time they talk, whatever they have to do to keep it functioning. And quite often that means blowing this, balance sheet up and buying a bunch of garbage. But as you can see right here, they're not doing it. They're not buying stuff this week. And that is a really important thing to take a look at. And then I guess the other look is volatility. I was trying to get, yeah, so we're just getting this kind of sideways activity, and the volatility is trending up during sideways activity, which I'm seeing bearish signals in the liquidity and the volatility in the dollar, the financials. The financial kind of liquidity stuff is looking a little bit dangerous right now. But the actual technicals are just kind of chilling out and not really giving much of a signal. Vol, like how much downside risk in the market is just hasn't really changed. Um, let's look at the treasury spreads. This is on the daily, and they're down. Okay, yeah, this is an interesting one. So they're talking about buying bonds, but their balance sheet shows they're not doing it right now. As of last week, they weren't. But they just announced it this week, so I want to see what it actually looks like when it comes out. But yeah, we're having these wobbles in the yield curve spreads. What's this? The 5 to 30. This is a good one. And so it looks like it's continuing. It looks like the yield curve is going to steepen. That's good for financials if it keeps to steepen. And let's do like a 2 year to, I don't know, like the 2 versus the 10, I think is a good one. Okay. It's less of a signal here. And so the reason to look at these treasury yields and the steepness of the yield curve is to try to see if it stays steep, then it kind of gives you a picture of the angle of the recovery. Like, a steepened yield curve that stays steep is sort of the angle of the recovery, and right now it's from close to zero to, like, a 1.5% kind of yield curve. It's a low yield curve that would project a really slow, long recovery, but it's definitely not an inflation signal. It's close to zero, and it's not going deflationary where it's dropping to negative. And so that's kind of the thing to look for on the yield curve. Like, if it starts to flatten out again, it gets a little scary. and it's been kind of wobbling. You can't really tell if it's steepening or flattening yet right now, but it looks like it's trying to steepen. And if it steepens in negative territory on the US dollar, that would be a deflationary scenario that sort of Raw Paul talks about. And I've heard him talking a couple times the past week, like, why aren't the bonds, why aren't the interest rates going negative yet? And, like the Brent Johnson dollar milkshake theory, where there's just a ton of dollar demand because 70% of the world's monetary supply is dollars. Everyone owes debt in dollars. And so just that dollar demand should be driving the dollar up. And that's not what we're seeing. We're not seeing that happen yet. We're getting a weaker dollar move down here, and now maybe we're getting a stronger dollar. But the dollar milkshake theory really says that like gold and dollars and stocks should all go up at the same time, and we're not getting that happening. So if that kind of scenario happens, I don't think it's starting this week. But we just got a huge move down, so it wouldn't be weird to get a reaction. I mean, obviously on this one, this is when we had the world liquidity squeeze, and the dollar was starting to weaken, and the whole world just said, "Whoa, like we need dollars right now," and it went nuts and just shot up here. But right now, the international banks don't need the kind of dollar liquidity that they needed here, and so it would be a little bit of a different analysis on why this is moving up. And for right now, I mean, since this point, the stock market has been swinging inverse to the dollars, and so I mean, this push down was a push up in the market. This push up has the market's been turning over. So I mean, you could do a little bit of tech analysis on the dollar to take a look at what the stocks might do, and I think that is a thing to look at right now. And it does look like the dollar is kind of trying to make a breakout, whereas on the S&P, yeah, I mean it's similar. The S&P is maybe trying to break down. This doesn't look like too much of a breakdown to me. This looks like it doesn't know what it wants to do, and I guess basically not investment advice, but like a trade for me. If the volatility settles down, I might add more long volatility. I still have That's one of my biggest trades right now is long vol, and I went long vol, I guess, like back here somewhere. Um, and this is where things got really interesting. The S&P was flat here, and we started getting the volatility increasing against the flat S&P chart. That was like the island top on S&P, and that's where we got the huge drop in the blast. And right now we're getting something similar. The S&P is flat or moving up. The S&P is actually kind of moving up a little bit right now, and volatility is moving up at the same time. So there's a few danger signals. The dollar's trying to move up, volatility is trying to move up, and yeah, the yield curves are pushing down. So I think just kind of on those, that is looking a little bit bearish. Just looking at the chart, the technicals on this don't really tell you anything. It's just kind of a consolidation area. It doesn't say where it would break, but I really like a move up here. If that chilled the volatility out, I would like to add to the long vol position. And then if we do like break and test this thing again, that would be a big bearish signal. But I think the thing to watch today is that balance sheet, man. I want to see if the Fed is just completely BSing, man. They come out, they're like, yeah, we're going to buy a ton of stuff and blah, blah, blah. Same time, the balance sheet's dead flat. They're not buying anything at all. And the Treasury's issuing a mess of bonds and taking liquidity out of the market at the same time. And that's what it looks like today. And this time it has nothing to do with the international banking system. The like the euro dollar kind of futures, it doesn't look like a bunch of dollar demand internationally right now. Like, I think all the changes they made actually worked, and the international banks are not feeling a liquidity squeeze right now. But the now it's the domestic banks, and the individual bond buying is targeting individual U.S. banks is what I think is going on. And then and they don't have to buy a whole ETF if one bank needs liquidity. They can just buy a couple bonds from one bank and not go interfere with the market in a huge way. So, yep, that's what I'm seeing here. I'll add this to my coronavirus playlist. Please hit the subscribe, and I think there's a couple other companies that did weird stuff. Let me take a look at that, and hopefully I can actually get the correct balance sheet stuff for today and with the next video. And happy trading.